Well, good morning, everyone, and thank you for joining us for today's webinar on financing change, powering the sustainable ag value chain. My name is Kelsey Swango Billings, and I am the Vice President of Innovation and Stakeholder Engagement at Field to Market. And I'm excited you joined us during Climate Week for what promises to be a really thought-provoking conversation. We're here today because financial uncertainty remains one of the biggest barriers preventing farmers from adopting conservation practices at scale. While the demand for sustainable and regenerative grown crops continues to grow, and the technology exists to help farmers adopt these practices, the financial tools to support farmers in the implementation of these practices are still developing. So today, following a quick overview of Field to Market and our focus on innovative finance, Field to Market leaders will discuss what agriculture needs right now and the challenges they're navigating and the gaps we're seeing in the industry, plus why targeted leadership development is essential to accelerate progress. And we'll conclude with something I'm incredibly excited about. Field to Market's President Carrie Vollmer-Sanders will join us to announce the launch of a new program, as well as some special announcements from this week. So let's dive in. For those of you who may not be familiar with Field to Market, we are a nonprofit organization created nearly 20 years ago that builds trust and drives action by uniting the agriculture value chain. Our vision is to build a strong support system to enhance both farmer livelihoods and resilient ecosystems. This requires deep collaboration and partnership with our members across every part of the agriculture system. We're a multi-stakeholder alliance that brings together the entire ag value chain to define, measure, and advance the sustainability of food, feed, fiber, and fuel production in the U.S. Our membership spans from grower groups to civil societies, affiliates like universities and the public sector, agribusinesses that provide tools and services to farmers, and brands and retailers directly serving consumers. This gives you a sense of the breadth and diversity of our membership, nearly 200 organizations from across the ag value chain. What makes Field to Market unique is that we enable direct conversations between farmers, the brands and retailers at the end of the value chain, and everyone who plays a role in between. Connections that don't typically exist on their own in the industry. By bringing the entire ag value chain to the table, we enable honest dialogue that is essential for tackling complex issues like innovative finance. Over the past year, we've been diving deeper into innovative finance, specifically because we recognize that education and collaboration across our diverse membership are critical to unlocking solutions. There's powerful new research from one of our members that demonstrates exactly why innovation in ag finance has become mission critical. The Environmental Defense Fund, who you'll hear from next, just completed some timely research with agricultural finance leaders worldwide. And Maggie Monast may dive deeper into this study during our panel discussion, but I wanted to highlight a few findings. When looking globally, every agricultural finance institution outside of the US already offers financial products tied to sustainability. But here in the US, fewer than half do. But the encouraging part is more than half of those finance leaders see the growing demand for sustainably grown products as a top business opportunity. The market is there. The demand is there. The case for action is clear. What we need now are the innovative finance mechanisms and leaders within the industry to bridge that gap. You'll hear in our next discussion that there are already some great examples of US agricultural leaders and lenders making real progress. Figuring out what farmers need financially to make sustainable and regenerative practices achievable, and finding smart ways to work with the entire ag value chain. But we need to scale these successes. In a recent study, Field to Market asked 500 farmers across the country what their biggest barrier to adopting sustainable or regenerative practices was. The answer didn't surprise us. Nearly 3/4 pointed to financial uncertainty and the impact on their bottom line. That survey was a turning point for Field to Market a few years ago. It showed us that while there's increasing attention on these financial barriers and growing questions about innovative solutions, there's still a real gap. We realized that Field to Market, with our unique position connecting farmers with our value chain members, could play a critical role here. We need targeted approaches that address key farmer concerns and we need to map out which financial innovations can actually deliver results. That's exactly why we decided to explore how we can better support our members in developing innovative finance approaches that work for farmers. In 2022, Field to Market published our Blueprints for the Value Chain report, and this really kicked off our leadership in sustainable ag finance. The report does exactly what it sounds like. It equips the ag value chain with concrete financial innovations to support farmers through the risk and rewards of adopting sustainable practices. We identified 12 key blueprints for how companies can harness different financial mechanisms to support farmers on the ground. These aren't theoretical concepts, they're concrete strategies for overcoming the real barriers farmers face in addressing both agronomic and financial risks of implementing sustainable practices. The 12 blueprints fall into 5 categories: blended finance, using capital from public or philanthropic sources to increase private sector investment in sustainable development; sustainable finance, which focuses on environmental factors; transition risk sharing, those are mechanisms that help offset specific risks for farmers adopting new practices; pay for performance, programs that incentivize farmers for the environmental outcomes they deliver through conservation practices; and land tenure and leasing incentives, strategies that reward farmers with leasing benefits for stewardship on managed versus owned acres. That report was really just the beginning. It showed us that there was a clear need for Field to Market to take a stronger leadership role in exploring and promoting these innovative finance strategies within the ag industry. So we did what we do best. We brought people together. We established a standing innovative finance committee as part of our governance structure, maintaining that same sector balance approach that's fundamental to everything we do at Field to Market. This isn't just a working group that meets occasionally. This is a permanent part of how we operate, because we recognize that innovative finance requires sustained collaboration to move from ideas to real-world solutions. The co-chairs of this committee, as well as 2 members of our board, are here with us today to share their perspective. Our next panel discussion will highlight why innovative finance is critical to our work in sustainable agriculture and what's needed to build more support for these approaches within our own organization and with the farmers who are at the heart of our work. I am pleased to introduce the moderator for our discussion, Alan Martinez, lead for climate and nature finance at Cornell's Atkinson Center for Sustainability and co-chair of our Innovative Finance Committee. He's joined by our other committee co-chair, Maggie Monast, Senior Director of Climate Smart Agriculture at the Environmental Defense Fund, as well as Field to Market board member Mindy Montgomery, Vice President of ESG and Corporate Sustainability at CoBank, and Field to Market board member Brandon Hunnicutt, Nebraska farmer and board chair of Nebraska Corn Growers Association. And as I mentioned, following the panel, we'll be joined by Field to Market's president, Carrie Vollmer-Sanders, for a special announcement. Thank you so much to our speakers for joining us today. I know many of you are in the midst of a busy climate week in New York City, so we're grateful you carved out time to be here with us today. And with that, Alan, I'll turn things over to you to kick off our discussion.
Wonderful. Thank you, Kelsey. And there is no other place I'd rather be. I have been waiting a long time to have this conversation, and I am so thrilled to be with all of you. Brandon, Mindy, Maggie, thank you for agreeing to join us this morning. I have had this opportunity to get to know Field to Market from the perspective of the research work that we do at Cornell Atkinson. There we are looking to connect researchers with practitioners, with policymakers, with growers, and to really accelerate sustainable agriculture. And the way that Field to Market does it is just a delight. I think what we've also found, especially working with my co-chair, Maggie Monast, over the last few years, is that it's really hard to scale sustainable agriculture without finance. Finance is that muscle, it's that lever that makes things change. And today, we are going to spend a little bit of time really exploring that a lot more, because I think it's as Field to Market and Cornell have been looking at this question of sustainable agriculture. What we've come to is it's about not just about the tools, the financial mechanisms, and the influential work that Field to Market has done in this field, but it's also the leadership And you really need both of them to bridge the capital markets and agriculture. So today I have the pleasure of leading a discussion, and it's a conversation. I really want Maggie, Brandon, Mindy to feel like this is our conversation. It's the dinner that I wish we were having in person, the lunch at a great New York City venue, or just a great time to be at your local diner. This is so treat it like that. This is not about a formal academic discussion. This is about something a lot more important. So I'd like to start personal. I'd like to start with a question around when you discovered that the agriculture system, the finance system, really had to change in order to accelerate sustainability. Was it a moment? Was it a conversation? Was it a number or research that really spoke to you in your work? And please, let's start off with that and take an opportunity to introduce yourself a little bit more for the rest of the audience. Maggie, I'm going to start with you, then Mindy, then Brandon.
Happy to, Alan. Thanks so much. Yeah, I'm fortunate to lead EDF's agriculture, finance, and insurance work, and I have a really great team working with me, as well as a much broader team that works on corporate collaboration with the value chain, science, economics. And so being able to bring all those things together is what I really enjoy. And my ag sustainable finance origin story really came out of a conversation with one of EDF's farmer advisors. We've got a group of farmers that have advised EDF for some of them, a decade or more. And I was talking with Scott Henry, who farms just outside of Des Moines. And he and a few others, they really wanted to better understand the impacts of their own conservation adoption on their budgets. And when he told me this, honestly, I was surprised because he and these other advisors are very committed to conservation, and they're also very business savvy. So if they felt like the ROI on some of the practices they were doing wasn't quite clear, I saw that there was a much bigger data gap. And that really kicked us off on a lot of economic research on sustainable agriculture practices and systems, and really trying to understand what it means for the farmers economically. And that conversation with Scott kind of led to my second aha moment, which was when he introduced me to his lender. And so I spoke to my first ag lender at Farm Credit Services of America once we had some of that data, and he was like, "This is so great. We don't have any of this data. How can we get more?" And that really opened my eyes to how invested lenders are in the farm's kind of holistic financial health, yet how little information they had about the connections to sustainability. So that's what got me on this trail, and thousands and thousands of conversations with lenders later. I'm lucky to work with them every day.
Thank you so much, Maggie. Mindy?
Thank you, Alan. Happy to be here today to talk about this important topic. As Kelsey mentioned, I'm the Vice President of Corporate Sustainability at CoBank. CoBank is part of the Farm Credit System. So Maggie mentioned working with FCSA, which is also part of the Farm Credit System. Our mission is to serve rural America, including agricultural companies and farmers and ranchers. I guess my kind of aha moment was CoBank decided to put some more focus on sustainability about 3 years ago. And in that time frame, we developed a sustainability linked loan product, which we knew was out on the market with other financial institutions, but we did not have our own sustainability linked loan product. So we designed and developed one, put it into operation, and then about a year and a half ago now, closed on our first sustainability linked loan. And that was a defining moment for us in understanding the conservation programs that some of our customers are working on and wanting to expand and build upon. And we really did not have a good understanding of what that was or what that looked like. And we're still learning a lot about that. So it was great to actually go out to our customer, which is also in Iowa. Iowa seems to be a plethora of opportunities when it comes to conservation practices and programs to build upon. And meeting with those agronomists that are working on those programs, understanding what that looks like, how they implement or build on those programs day to day, and understanding the challenges too. And part of those challenges was the financing of it. They're wanting to build upon it, but they can't do that without some additional financing. So I feel very fortunate that we were able to work with our customer to implement and put in place a sustainability linked loan that could help them build out this program. And so it made us want to continue to do that. And how do we do that with other customers? How do we engage other partners to advance these programs?
Mindy, thank you for that. Brandon, I'd love to hear your perspective and your experience here.
Yeah, thanks, Alan. Glad to be here today. Brandon Hunnicutt, corn, soybean, popcorn farmer from South Central Nebraska. Do chair the Nebraska Corn Board. Been involved with Field to Market, National Corn Growers Association, a lot of different organizations, I guess. But I think, from this was never one moment in time. It's been a continuing process. So, one of the advantages I've had is to be around farmers everywhere from Maryland to California through work with National Corn. And some of this thought process started back when our Maryland friends were dealing with Chesapeake Bay area issues, and realizing that there's going to be some things fast forwarding into the rest of the United States. Iowa's different than Nebraska. We're not dealing with water runoff. We're trying to deal with what we're pumping out of the ground. How are we dealing with water quality, water quantity, those issues? But as we were moving forward on these things, realizing that there was not an appetite necessarily from farmers to invest in certain sustainability practices. No matter how much we talked about, you could do things better for the soil, for the water, for the future generations. It's a giant added expense, and most of us as farmers deal with the local bank, and a lot of those are small family-owned banks. They might be getting bigger and bigger, but your relationship is so much with that localized lender that if they're not buying in, something has to change. There has to be some sort of other mechanism here to push this forward, because at the end of the day, we're worried about buying fertilizer and seed and making sure that we have equipment that can run. The afterthought is the sustainability practices, because it's like, if I need to put cover crops in, that's an added expense. If I need to make an equipment change for some sort of sustainability practice, that's an added expense. And most of us, to be honest, we don't like going in and applying for extra money from the federal government. We don't want to go through all those hoops. We want to be able to do what we do on our farm best. But we realized we needed somebody to come alongside of us and help us with that. And eventually it was going to have to be the financial institution. So it's just been this overarching discussion throughout the last probably 15 years that, from my perspective, has gotten us to this point of where we can really make systematic change.
Brandon, I'm going to stay with you. I know that you travel a lot, and you probably host a lot of sustainability leaders, corporate sustainability officers, financial institutions, investors. You host them and you try to immerse them in what is this world of agriculture, and what is what are the growers experiencing in your association. I'm curious if you could say a little bit more about the expense side of it, and the reality of farmers having to make things work. There is an income statement, there is a balance sheet there that is really critical. What is the range of comments that are made when the CSOs leave, when the sustainability folks leave? What are the growers saying to you about the desire, the demands, the requests for change on fields? I'm curious how you might phrase those.
You know, I think a lot of it just comes down to throughout time, there's probably been a lack of understanding because at the core, all this seems simple. Like, all right, if we do X, Y will happen. It should, but there's everything else in between there that I think gets lost in the conversation. And the farmers are looking at it that if I make these changes, how is this going to disrupt everything else on the farm? And I think that's what gets lost in some of these conversations. It's not just a matter of if I do this, there's some sort of environmental outcome that is great. But what is the economic hit that I'm going to take as a farmer? What is the yield hit? So if one of the most important tools within a farmer's toolbox is crop insurance. Well, if I take a yield hit and that affects my crop insurance, that affects the ability to farm the next year. Um, what does this how does this play out in the long term? And I think those are the conversations that end up happening is we are really good as farmers of thinking about the what ifs and the bad
Mhm.
scenarios. And I mean that not bad in a bad way, but okay, what's the negative outcome that'll happen from there? And I think sometimes there's a disconnect that we as farmers need to do a better job of explaining to the sustainability people, the CFOs, the CSOs, whoever it might be, that these are the actual challenges. It's not that we don't want to do it, but help us work through that situation. So maybe there is a backstop if something goes wrong. It's not going to make us whole, but it's a backstop than zero.
It's a great reminder, really great reminder of farming as and farmers as the original risk managers. Mindy, I'm curious if you'd bring your perspective here and help us remind us that as an organization, you're serving other organizations that are lending into, investing into the real economy, and oftentimes dealing with risks that many of us don't even think about. I'd love to hear more about this risk piece. What's the risk that financial institutions, yours or others like yours, are facing that maybe we don't talk about enough? And despite all of the conversations we've had here at Climate Week this week, are we really recognizing the risks that are fundamentally holding financial institutions back?
Yeah, it's a good question, Alan. And Brandon touched on the cost aspect, and I think that's a big piece of what we have to look at and analyze as we are, structuring a transaction. And what I've heard from a lot of um, uh, agriculture cooperatives that we work with is a lot of these costs have to happen upfront. And how can a financial institution support that upfront cost, knowing that the economic benefit may not occur until later down the road? And so what does that mean for the financial institution's a collection on that loan and that transaction, knowing that maybe a farmer can't make all those payments kind of right away because they need that economic benefit, which again is going to happen maybe later down the road. So the risk for the financial institution is that return, that payback, and so that runs into our consideration of our loss or potential loss on the loan. That's something that a financial institution has to consider and factor. But another risk that I've found, and I think Brandon, kind of touched on this a little bit, is the financial institution's understanding of the agricultural practices or the conservation practices and how that impacts a farmer, or in the case of CoBank, I mentioned we work a lot with agricultural cooperatives, and those cooperatives are working with their farmer members to implement practices. How does that affect the cooperative as well? What kind of impacts could happen there at that level, in addition to the farm level? So, having a better understanding of the practices, the implications of those practices, and then I think that will help us structure a transaction appropriately, considering those and considering the costs involved. I think that's an important piece.
Maggie, you've seen, I don't even know how many leaders you spoke to this week while you were here at Climate Week. You see this a lot, and you probably get a lot of pitches for what we need is another investment fund. And so I'm really curious to hear your thoughts on what are the blind spots? What are people not realizing as they think about the role of finance in this space? And how is it disconnected or not and from some of the other conversations that you're hearing here from Brandon and Mindy?
Yeah, obviously I'm back home. I'm not in New York City anymore. But I do think that in general, there is a desire for different parties in these conversations to understand each other, but there's still a pretty significant lack of understanding in many cases about where farmers are coming from, or where food companies are coming from, or where financial institutions are coming from. And that is still a barrier to figuring out collaborations that are truly, win-win-win for everyone. So, just to build on Brandon's example about some of the risk of really making any change, when we're thinking about risk, like there are three things you can do. You can better understand it, figure out, is it a real risk or not? How likely is that risk? Reduce it. Like technical assistance is huge here, peer-to-peer support, practice adoption can go well or poorly, and a lot of that is around management. And you can share it, right? We can spread that risk among multiple parties so that it's not just all on the farmer. But I often hear, I think folks can tend to make things a little bit overly simplistic, like, oh yeah, a 3 to 5 year transition and then you're more profitable than you were before. Like, well, anybody who has talked with farmers about their actual transition to new practices know that, number one, the rule of agriculture stuff happens, like bad weather year, pests, what have you, and depending on the rotation, all of a sudden that 3 to 5 year transition turns into longer. And so really it becomes about kind of meeting farmers where they are, wherever they are, understanding what that transition needs to look like for them, and then figuring out how you can bring alongside the technical support and the supportive funding and financing that help them make that change. And in all of that, I think collectively, we need to bear in mind also the cost or the risk of inaction, right? There are risks to Brandon of changing now. There are also risks of not changing, right? Not taking action on dwindling water supplies, and how does that affect him and his fellow farmers in Nebraska? So I think together we still need to do some more work to really uncover the real barriers and ways we can overcome those barriers respectively within each of our positions.
So powerful. Thank you, Maggie, and thank you for keeping it PG for because we did invite our audience, our kids to this talk as well. I really want to, but don't feel like you have to. You can't. I think I'm hearing a lot of the people talking past each other, not really understanding the full spectrum of risks. And that disconnect, I think, is what we have done really well at Field to Market to help close. And so I want to shift a little bit to the next batch, the next generation of leaders in this sector. I know that all of you are working with different organizations and individuals. You've worked across these sectors for some time. if you had to name some non-negotiables for future leaders in sustainable agriculture, what would they be? Especially as you think about the people you work with, or the partners you work with, or the people you hire. What are some of the traits that you're looking for that tells you, yeah, this person can probably figure out how to bridge the conversation and not stay in a silo? It's a hard question. Maggie, Mindy, I'll start with you.
I can jump in there just because I'll pick up right on what you said, Alan, because, you know, coming from an advocacy perspective, and we work with everybody throughout the value chain, financial institutions, farmers, you know, what I think is most powerful about the kind of work that we do is that we can bridge, you know, the farmer to the CEO, to the policymaker, and try to figure out how we can understand each other. The most important thing that I look for is somebody who can really put themselves into the shoes of another person and try to understand what motivates and drives them, and how they can make whatever it is that they want to happen align with the interests and needs of that person. So it's really like know your audience, and being interested in the perspectives of more people than just yourself or your own industry.
Yeah.
Yeah, that's a great great attribute, and completely agree with that. A couple things I'll add. I mean, specifically in this environment and working for a financial institution, the ideal, you know, person, kind of the next, you know, next leader, next generation would be somebody that understands, has a good understanding of agricultural conservation practices. I will admit I do not have an ag background, so I feel like I'm playing catch up in learning what some of these practices are. But to Maggie's point, I really enjoyed interacting with our customers, with farmers, asking them questions, understanding why certain things work, why they don't. If someone has a solid foundation in that information, that would be a big help working in a financial institution, because they understand the practices. But then also having like a finance background, that combination would be ideal. And you know, is it out there today? I don't know, but maybe planting the seed for, you know, somebody that's listening. If you had both of those backgrounds, that'd be pretty amazing. But I also think collaboration skills are really important. You know, Maggie referenced interacting with all aspects of the value chain. Field to Market brings that total value chain together with its members. So being able to work with other parties, stakeholders, and having the flexibility to adjust as needed. This environment changes constantly, so being able to adapt and try to stay up to date on what's going on, because there's all kinds of new things coming out, which is exciting. And so just being able to adapt and have that flexibility in this environment, I think would be a great attribute as well.
Thank you, Mindy. I mean, and we do such a great job in research universities to create new things, new practices, new ideas, and it is hard to keep up with it. Brendan, you know, from your vantage point, you've worked with Field to Market for some time, and you've seen a lot of things. I'm curious where you see leadership formation happening. What are the sparks out there that that are encouraging for you?
That's a great question, because I think, you know, if we go back, you know, through this whole discussion from a farmer's perspective, that there was a lot of these sustainability practices have been going on for a long time. You know, you hear about guys no-tilling or cover cropping for the last 40 years. But it really has only been, I'd say, in the last 15-ish years that we have really started to focus in on this conversation. And there's been groups that have come and there have been groups that have gone, and there's, you know, new ones that'll pop up. But I really do think that being able to work with field to market has been really good in this aspect because it's the one that's bringing together the different voices. And I'll be honest, as a farmer, being able to go there and have conversations everywhere from brands and retail to ag business, I have a lot of conversation with ag business. That's part of what we do as farmers, but it's that other end, that group that we don't ever see. That's this mysterious group out there that as a farmer, I know I harvest a crop, it goes to the elevator. I don't know where it goes after that, but I know it becomes a product. But I really think that we've seen this leadership development really come through at field to market, where it's these voices that are coming together, they're collaborating, they're discussing things, and it's been refreshing because then we can bring that conversation back to our other groups, whether it's farm groups or whatever those groups might be. So I think that's been really encouraging for me as a producer, as somebody who's involved with a number of other organizations. Because not all those conversations happen. We have
Mhm.
a thing every year called Commodity Classic. There's brands in retail slowly there, but they've been missing. We have other conferences that I go to, and everybody else is missing, but this is the one convening hub that has come together, I think, really push this message forward.
I think that's so powerful. What you're describing, Brandon, is being deliberate, about where we are developing leadership and creating that space for it, and layering on those skills that Maggie and Mindy described, of bridging, of empathy, of collaboration, and of course some hard skills, or
Yeah.
harder skills, the cash flow and the financial statement analysis. I know that we're running close on time here, so I'm gonna try to speed up here. I want to turn to another topic, which is what we wish others understood. And I'd love to start with you, Brandon. If you had a microphone, right? If you could talk and some of us rang the NASDAQ bell this week. If you could talk into the financial sector to help them understand what are growers going through today, what would you want to say?
What growers are going through today is as close to the 1980s farm crisis that I can understand. I was a teenager during that time. All I cared about was playing baseball and whatever else was going on. But we're starting to see pain points showing up that are unlike anything I've seen. We have these 20-year cycles, but this is the first time that I've heard people actively younger than me go, "Why am I doing this?" And it's not because they don't love farming. It's because they're like, the stress, the financial pressure, it's overwhelming. And so any of these things they want to try, they want to do better. It's just an added financial stressor that is going to push some of them to the breaking point to say, "I'm done." And I think we're at a very, very dangerous point within agriculture, that we potentially will lose a lot of individuals, or we're just going to put a Band-Aid over it for a couple of years, and we're just going to push this pain point down the road. But this is where we're at. This is definitely where we're at. And in the 25 years I've been back, I have never heard conversations like this. And I came back when corn was less than $2 a bushel, and when it hit $2, it was like, cool, I probably can make some money. This is I don't know how I'm going to make money time frame.
Yeah. Mindy, I'd love to hear your thoughts on how are you talking to farmers now? How are you gathering information, but also engaging with farmers at a financial institution, but obviously a financial institution that is very close to growers and producers.
Yeah, that's great question. Definitely hearing the same sentiments that Brandon just expressed. And the nice thing about being a farm credit institution and being part of the farm credit system is we are mandated by Congress to support rural America, and that is our mission. And so we will continue to support our customers through these tough times. But I think as part of that, we also need to recognize that sustainability may not be at the forefront of, what our customers are trying to achieve at the moment.
Mm.
So if that's the case, then how can we work with others to try to support that effort through these challenging times? Are there other ways to fund sustainable practices in addition to a traditional loan? If a farmer is not looking to take out additional transactions or loans, as Brandon noted. So I think that goes back to what Kelsey mentioned earlier in these innovative financing solutions. How can we think outside the box in order to continue to support sustainability efforts through these challenging times? So it's lots of conversations with our customers to get through this.
Thank you, Mindy. Maggie, I see you wanting to jump in here, and I have a very specific question. Well, if I can't imagine any organization this year saying that they aren't pivoting. Everybody is pivoting. And I'm curious how EDF is thinking around um, the change, the pivot, the direction that the work is going, especially when it comes to environmental and sustainability, not risks, but opportunities that you're seeing.
Mm-hmm. Yeah, I think just to build on what Brandon and Mindy were saying, we have to be sensitive to the economic time that farmers are facing. And really the one thing that I wish kind of the broader industry understood is that, climate and sustainability issues are business and economic issues. And business
Mhm.
and economic issues are climate and sustainability issues. We can't disentangle them or see any of them as irrelevant, but you do have to change your approach. So right now, we all just need to be oriented around how can we make it easier and more economically viable for farmers to continue what they're already doing on sustainability, or try, things that they feel comfortable trying. And think about throwing lifelines instead of, stacking on new or more difficult things. And so I think if we all orient ourselves around that perspective, we can be coming to farmers with solutions instead of just more complicated things for them to fit into their already very packed brains.
Wow. We are close to time here, so I want to thank you for spending time with us on this really important topic, and I think it does speak to a couple of takeaways. One is, as we can all hear, finance is moving from the sidelines in sustainable agriculture to becoming a really central part, and that's sometimes by luck and sometimes by need, but it's definitely happening. And we're so lucky that the leaders like yourselves are taking that up and developing the tools, but also demonstrating the leadership we need in this sector. I think we also have had what I've heard is that there's this opportunity for us to do more, and that we need to do more, and that's exactly why Field to Market and Cornell Atkinson are teaming up here, because investing in these people that are going to help lead the way in the next 20 years is going to be really important to learn from what you described as the need for bridging, as the need for understanding, and the reality of what's actually happening in these cycles that Brandon, you shared with us. So with that, I'm going to stop here. I'm going to hand it to Carrie to share the next step, launching a leadership program design that something that we've been designing together over the last few months. Thank you to the panelists. Carrie?
Thank you, Alan. And wow, that was an excellent session. Whenever you bring diverse perspectives together, you always learn a little bit more and hear the nuances from throughout everybody's experience. And as you all heard, finance is the key enabler to drive action. And when farmers implement some of these conservation or regenerative practices there can be this negative or maybe long-term ROI. So when we were talking with our nearly 200 members in the ag value chain, they said what we needed to do is similar to what Maggie had mentioned. We need to help address the risk, and it starts with an understanding of the finance, the sustainability, the agriculture, to help implement those programs that can help advance all of agriculture. And we can do that through unlocking capital. So we listened to our members, and we're just thrilled to announce this Field to Market's new Resilient Future Leaderships Program, Financing Sustainable Agriculture. This is in partnership with the Cornell Atkinson Center for Sustainability, and couldn't think of a better partner to help launch this program. You know, busy professionals can go a lot of different places to help learn about financing sustainable agriculture. What sets this program apart is that not only is it hands-on training about regenerative agriculture practices, those conservation practices, we're really focused on how to measure sustainability. So you get that understanding, how to measure success if you put a program together. And then what are those innovative finance opportunities? What are the types of things you could be thinking about? We're also, because Field to Market works across the 5 sectors, think about growers, agribusiness, brands and retail, civil society, and our affiliates. We're bringing all of those folks together to have a diverse cohort. So you can really learn a lot more about what's happening in agriculture and the finance world, because you have the diverse perspectives in that cohort. Folks that attend this program, they're going to be able to directly engage with the experts, because the speakers that are involved are directly engaged in agriculture. Some are farmers themselves. They're involved in sustainability, whether it's with global programs and policy, or maybe locally implementing programs, and then financing sustainability, period. So it's a broader and deeper program than what you might be able to get anywhere else. Our ultimate goal is to promote the adoption of sustainable practices in agriculture. And some organizations are estimating that climate action could create $1 trillion of additional economic output. We want agriculture investment to be successful. And this program will help equip the leaders with the skills to integrate sustainability into those capital decisions. There's 3 different modules to the program. So the first is it's going to be held at Commodity Classic, and it's going to focus on the global, the US and local policies related to sustainability. It's also going to have some firsthand knowledge of farmers coming in and presenting to the group. The second module, we're going to head to Cornell's Ithaca campus, and we're going to learn how to measure sustainable agriculture, how to measure adoption and impact, and gain some on-farm perspectives. And then we're going to head to the New York City, New York campus, which is where I am today. Thank you, Alan and team. But we're going to take a deep dive into putting all of this together, financing sustainable agriculture. So applications are now open. You can visit our website to find out more information. If you're on our website, you can click on what we do, and then the leadership program underneath that. The program is geared towards those mid-career professionals who is an expert in finance or agriculture or sustainability and want to learn about the other 2. The application deadline is September 5th. That's International Soils Day. And selections will be made by December 19th. And we'll have a program start at the end of January. So we're really excited. Please take a look, and we hope to see your application by the beginning of December. There's a few other things happening at Field to Market. This week has been a very busy week. Yesterday, we published our 4th Sustainability Commitments Report, And that means that we have an updated sustainability commitments hub on our website as well. And we highlight our members' ambitious goals and progress across the ag value chain in sustainability. It's really empowering to read if you take the time. We've got 63% of our members making public sustainability commitments, and you can see the momentum across the value chain tackling these shared natural resource challenges. It's really impressive. And it's through resources like our FieldPrint platform, our regenerative ag guidance. The Field to Market is providing members with science-based tools to help not only set these ambitious goals, but to track progress and to deliver transparency in reporting. The other thing that we've done this week is on Monday, we launched the FieldPrint platform version 5. And there's significant upgrades to the science, the functionality, and the user experience of the industry's most widely used and affordable sustainability measurement frameworks. If you, again, head to our website, you can take a look at this, interact with it now. But some of the highlights include enhanced emissions and removals accounting for strengthened Scope 3 reporting, revised energy use, greenhouse gas emissions, and quantitative soil carbon indicators aligned with global standards. We've also integrated direct land use change for more complete and transparent climate impact and streamlined the data entry, which makes everybody happy. And we've improved the user interface for reporting. So when we think about these enhancements, they support Scope 3 emissions reporting requirements. They help companies more accurately track and report progress towards their sustainability commitments. So, and last but certainly not least, if you are not a member, we would love for you to join Field to Market's broad membership and taking advantage of the benefits that we offer. Please reach out to our team. Some of us are in at Climate Week this week, but you can send us an email, check us out online. We do hope to see your applications or nominations for the Financing Sustainable Agriculture Leadership Program. Thank you so much for supporting Field to Market, for supporting the agriculture industry, building resilient ecosystems, and helping improve farmer livelihoods. We hope you have a great week.